Welcome to Kanga Crypto News, where we break down the most significant events shaping the world of cryptocurrencies. Today we have major updates including surprising government moves, security breaches, market turbulence, and regulatory shifts. Stay with us as we analyze what these stories mean for investors and crypto ecosystem. As usual, later in the material I will present the rules of the competition in which you can win some KNG tokens. And I will also announce the winner of the last week's round, if there is one. Before we begin, remember that all information for Kanga Crypto News is gathered by experienced Kanga analysts based on reliable sources. Also, keep in mind that this is not an investment advice. Kanga Crypto News episodes are released every week on Fridays, so if you want to stay up to date with the most important information from the crypto world, subscribe, hit the bell, and to make sure you're not going to miss any important news. So let's begin. US President Donald Trump has announced that his administration would direct the president's working group on digital assets to include Bitcoin, Ether, XRP, Solana, and Cardano in the US Strategic Reserve. This represents a major shift from previous policy which focused almost exclusively on Bitcoin as a primary reserve digital asset. So what are the implications? The move suggests a diversification strategy within the US approach to blockchain, potentially recognizing utility-driven networks alongside Bitcoin. Also, the inclusion of these assets may accelerate discussion on their legal status, especially for XRP and ADA, which have been scrutinized by the SEC. Now, if the US government officially backs these assets, it could boost adoption and price stability. So what's the key takeaway for you guys? While it's unclear how this policy will be implemented, the announcement alone could fuel speculation and increase institutional interest in these cryptocurrencies. The US Securities and Exchange Commission, SEC, has unexpectedly withdrawn its lawsuit against Kraken, marking an important moment for crypto industry's fight against overregulation. The lawsuit alleged that Kraken was operating as an unregistered broker, dealer, and clearing agency, but the case was seen by many as part of a politically motivated campaign against crypto firms. So what does this mean for the industry? The withdrawal signals a possible shift in SEC's stance towards crypto exchanges. Other major platforms, including Coinbase and Binance, are still facing regulatory battles, so this is not a complete victory. Could this be a turning point? The dismissal raises hopes that legislation rather than enforcement action will define future crypto regulations. This decision could pave the way for a more constructive regulation rather than hostile lawsuits. Investors should watch how other pending SEC cases unfold. A crypto exchange, Bybit, has confirmed that hackers stole $1.5 billion worth of crypto assets, making it one of the largest hacks in history. However, in a surprising twist, over 77% of the funds remain traceable thanks to blockchain transparency. So how did this happen? The hackers exploited a vulnerability in Bybit's hot wallet security. The stolen funds have been moved across thousands of wallets with attempts to launder them through decentralized exchanges and privacy mixers. Bybit has teamed up with blockchain forensic firms and law enforcement agencies to track and recover the assets. This incident highlights the risk of keeping funds on exchanges. Investors should prioritize self-custody wallets and cold storage solutions. The crypto market has entered a volatile phase, with Bitcoin falling below $83,000, triggering a wave of liquidations. At the same time, US Treasury yields have plummeted, leading to renewed speculation about potential Federal Reserve interest rate cuts. But why does this matter? Lower Treasury yields typically weaken the dollar, making Bitcoin and gold more attractive as alternative stores of value. If Federal Reserve cuts interest rates, it could boost risk on assets like cryptocurrencies by encouraging borrowing and investment. A key takeaway is that macroeconomic trends directly impact crypto, and investors should watch the Fed's decisions closely. Despite the market dip, El Salvador has purchased 5 more Bitcoins and continuing its Bitcoin accumulation strategy. The country now holds over 6,100 Bitcoins, reinforcing its commitment to using Bitcoin as a national reserve asset. Why is El Salvador so confident? It believes Bitcoin will depreciate in the long run, making these purchases strategic. Also, the government has integrated Bitcoin into tourism and economic projects. This signals a long-term adoption strategy rather than a speculative gamble. While some critics call this reckless, El Salvador is positioning itself as a global Bitcoin pioneer. Fintech firm Mintoke, backed by PayPal and HDFC Bank, has acquired CBDC startup DigitalEdge for $3.5 million. The deal aims to enhance digital payments and central bank digital currency infrastructure. The acquisition reflects growing interest in CBDCs by major fintech players. PayPal's involvement suggests more integration between stablecoins and CBDCs in the future. Governments might accelerate their own digital currency plans to compete with the private stablecoin issuers. So, to sum it up, CBDCs and stablecoins are converging, and this could reshape global digital finance. Now, Tether and Circle, the two biggest stablecoin issuers, are facing increasing scrutiny from the US regulators. The debate centers around how stablecoins should be classified and whether they should be backed by government-approved reserves. Potentially, stricter regulations could slow down stablecoin adoption, but also increase trust in regulated assets. A stablecoin war may be brewing where only government-compliant issuers will thrive. Stablecoin regulations will define how crypto integrates with traditional finance. Last but not least, the recent market downturn triggered over $1 billion in liquidation, mainly affecting over-leveraged traders. This event underscores the risks of margin trading, especially in volatile markets. So the key takeaways: leverage can amplify gains, but it also increases the risk of total liquidation, so stay cautious. That's all for Kanga Crypto News today. But one more important thing, information about the competition. You can win some KNG tokens. We don't have a winner of the competition. The winner of the next episode will get the accumulation of KNG tokens, so therefore be sure to take part in the competition. What are the rules? Propose a value that Ethereum to USDT might reach on our exchange at 9 AM Central European Time on the day of the next episode of Kanga Crypto News. You can find the market link in the description below. Submit your prediction in the format #Kanga Crypto News, then the episode number, followed by $ and your predicted value. To win, your proposed Ethereum value must be the closest to the actual value, but you cannot miss by more than 10 USDT in either direction. And you want to increase your chances of winning more KNG? Here's how. Post a second additional comment under the video that is unrelated to the contest. You can write anything you want. By doing so, your margin of error increases to 20 USDT instead of 10 USDT. Every week, the winner will receive a prize in KNG tokens, the number of which will reflect 10% of the likes on the last Kanga Crypto News episode. For detailed information, check the description below. Thank you for watching till the end. What's your take on these developments? Let us know in the comments. Make sure to like, subscribe, and hit the bell icon so you don't miss any important updates. Until next time.
We are Kanga, beyond crypto.